Hey, what's up? What is going on, guys? I hope you guys are having a lovely day. I wanted to make this quick video and go through every step of the trading process in as quick of a video and as simple as possible. I plan on eventually making a longer version of each step, but just to go through the process for those who are newer to trading or those who have not been finding too much success. So the first thing, so obviously the markets are closing up soon, but if it was about 9 o'clock in the morning, I would jump on this website here. It's called investing.com. There is a ton, literally a ton of great information here from stocks that are trending by sector. You can look at crypto, you can look at stocks, you can look at commodities, you can look at currencies, everything. So, what I like to use them for is news. So, I can just jump right on and I can go to stock market news and check out either latest news. We can see things that are important to us. NASDAQ falls as US export controls on China weigh on chip stocks. This is um, basically your economics class, but in a quick few minutes, just so you can get a quick grasp on what is going on in the markets around you. Because, yes, we trade using technicals, but it's the fundamentals that eventually move the markets. So, what I go to is here, the economic calendar, and I look for big things that are happening in the markets this week or the trading day that I am looking at. So when we go on the economic calendar, we can go to filters and we'll clear everything. And we will look at just United States. That's where we're trading. We're looking at US traded stocks. And then I go to importance. I want the most important things only. So I'll say apply. And when we go here, we can see that there was no real events or news today in terms of Fed meetings, things like that. Nothing tomorrow. But for this week, we can see we have our September PPI, we have our core PPI, jobless claims, crude oil inventories, and all these are things that can affect the market. So we can see on Wednesday, October 12th at 8:30, we have our PPI. Maybe we don't know what a PPI is or what that data shows. We can see it's the producer price index, measures the change in the price of goods and sold by manufacturers. It is a leading indicator of price inflation, which accounts for majority of overall information. So, if this is a um, something that is coming out an article, if it's something that'll be released that is going to tell us the leading indicator for price inflation, don't you think that that will affect the markets if this comes out less than expected? If the forecast is 0.1%, if it comes out less than expected, wouldn't that move the markets in a negative way? And if it shows that inflation is getting better, don't you think the overall market and most stocks would go up? So that's the first thing we look at. So now after we see there wasn't any news today, but we have some things coming up for next week, then we can jump on and look at our technical analysis. So the first thing I would do is I need to look for what stocks I want to trade. I go to products. This is on trading view. So I'm going to screen for stocks that I would like to trade. And since I trade intraday during the day, in day trade, I'm looking for things that are moving today. So I can filter. I'll try to remove as much of these as I can. So we want our change in percent. Okay. And then I don't really want volatility. So we will add indicators that are important for us to find the best stocks to day trade. So I'm looking for my average volume for the past 10 days. I'm gonna look for my where is that? Pre-market change from open and my pre-market volume and my overall volume and my stock price. So now that we added all of that, now it'll be a little easier for us to break down and look for the stocks that we want. So I want stocks. I guess I should have added market cap. Let's do that. So this one here, market capitalization, and that is how big these stocks are. I want stocks that have a bigger market cap. So I want the market cap to be at least 10 billion. Um, I want the volume to be at least a million. Now, pre-market volume at least 100,000. Actually, we'll say at least 500,000. Okay, so it gives us these stocks, and we can filter them by pre-market volume. So it gave us all of these stocks, and I was looking through and seeing which ones I liked. I went with Rivian. We can try this with any of these stocks. So Rivian was just what I traded today. So once we jump on to our um, chart, we open up Rivian. I open up the 5 minute chart, and you can refer to my older videos. I can't go through every indicator perfectly, but I look for my trend line on a higher time frame, and then I look at my support and resistance lines. So once I click this, I go to my 30-minute right here, 30-minute support and resistance lines, or supply and demand levels, and it gives me kind of this chart right here. So we know that with our filters, that a lot of people will be trading Rivian today. So we want to trade what's moving. And then we jump onto our chart. It gives us this level. So we have to ask ourselves, is Rivian positive or negative? Negative. It dropped about 10% in pre-market. So we're looking for an opportunity to go short. And then we can see in pre-market, it climbs up and comes into this supply zone. Right at the open, this drops. And that's when we look for our opportunity. We're looking for Rivian to trace back and come into this zone and for sellers to jump back in. So it comes back into this zone and it holds below the 50-day moving average. So I felt comfortable around right here to buy some puts on Rivian. When we watch the volume, we can see green volume. Look at the upper left corner, we can see 40,000 shares of volume of green, and then it drops in almost half, and then even lower. So we have less buyers because we're in this supply zone, resistance zone, and then it begins to sell off. So now we know how to screen for our fundamentals, the news. Now we know how to find which stocks to trade. We use our supply and resistance zones, and this takes a lot, just a lot of practice, a lot of screen time to get this correct or to feel more comfortable. Now, once we find where we want to buy these puts, how do we select the puts that we would like to trade? And for this, I'm using Robinhood. I don't trade on Robinhood. I like to use Webull and sometimes TradeStation, but Robinhood has this beautiful interface, and I know most beginners use it, so we'll use Robinhood. So when we jump into this trade, it was around 32, 31 to $32, right? Now, if we're buying puts, that means we think that things are going down. So they're going towards $30 and $29. But I'm telling you, when you buy puts that are at a higher price. Why? Because it will pay better. You will lose less in theta. And if you don't know what theta is, then you shouldn't even be buying contracts at all. So our price is, we'll say $31.50. And just say you say to yourself, I think it's going to go down to $25. So you go to buy Rivian puts that are expiring next Friday or this Friday. And I think it's going to go down to $25. When you go down to $25, we see this only costs 6 cents. But why is it so cheap? Look at the delta. Delta is how much money you make every time Rivian goes up. Theta is how much money you lose per day. Theta decay is how much this contract will decay per day. So unless you're in and out very quickly at the perfect prices, that means that Rivian will lose 3 cents per day and it is 6 cents. That means you are losing 50% per contract. You're losing 50% of your money by doing nothing. Just by buying the contract, in one day you lose 50% of your money. So why are you buying? This is called out of the money. You're saying it's going down. You're saying Rivian is going to go down. So you haven't reached the price you want it to go down to. So it's out of the money. I'm telling you, buy in the money. So go higher. Look for, if Rivian was $32, look for maybe $35 puts. Now, when we go to the $35 puts, it's more expensive. This one contract will cost you $378, right? So this one contract, if we add it, we can see it'll cost you about 300. Where do they have it? I'm sometimes confused by the how they set it up here, but we can see here it's $3.78 times 100, $378. But when we go to the Greeks, we can see our delta is now higher, $84 per move. and you see it fluctuates. But our theta, we lose 8 to 9 cents per day, but it costs us only 300, it costs us $378. So losing 9 cents on $378 is not that much, or $9 on $378 compared to losing 50% of your position. If you go and you buy um, $40, you can see the delta is even higher, the theta is even lower, but it gets more expensive because the risk is less. So less risk, it'll cost you a little more. But things that are more risky, they'll be cheaper because they know the chances of you being profitable are extremely low. You're basically throwing money at nothing. So you buy those contracts, and now it's just about price action, watching your volume and watching your price um, to your price target. And for me, I use percentages. 10%, I'm happy, and 5% to the downside. So if it starts going against me, starts going up, 5%, I'll take that loss and I'll be done. Um, you shouldn't be trading more than 3 times a day, more than 3 trades. And if you have 3 losers, then go back to trading with paper. So that is all I have for today. I try to make that as quick as possible. So number one thing, we go to our economic calendar, see if there's big news that is coming out. Number two, we screen for our stocks and see which stocks have the greatest pre-market volume and um, like big, large volatility for there to be moves. Number three, we find our supply and demand levels and only look for opportunities at those levels. Number four, we select our contract and make sure it's a contract that will be profitable. And then it's risk management. You won't trade with emotions if you have a exact price range where you want to buy and sell. If you tell yourself, I will sell at 5% loss every single time, you will not trade with emotions and you will survive in the long run. All right. Peace, guys.